Hello guys, today I'll be talking about my winning trade on 29 June 2023 for Gold USD. So I will only trade at the 8:30 window. So right now the time is 8:50 and at 8:15 we can clearly see that on the 15-minute chart there's a 15-minute fair value gap, and even though price is bullish, you can see that this 15-minute candle there is showing indecision market facing problem to close on top of the previous candle, closing barely in front of it. And at 8:30 there's a red folder news. There will be a final GDP price index news coming out, so I am expecting the price to be very volatile. I'll be watching the market price action first before deciding whether to trade. Coming to 8:30 window, my initial bias was bullish at first. I'm expecting the price to go back into this 15-minute fair value gap and reject from it. Yep. So coming into 8:30 window, my bias was bullish. So let's drop down to the 1-minute window where I take my trade. So let's fast forward to 8:30 to see the price action with the news release. Yep. So I saw that the price rejected strongly after the news was released, so I did not participate in yet, as it is very dangerous to take a trade when the news is just releasing, as the price will just shoot anywhere in each direction. So price is still dropping down. Yep. Okay, now I can see there's some retracement over here. There's a small fair value gap here being retraced into it. So at this point I was noticing that the price actually went back to this fair value gap, and I did not think much of it, as this may be just the market pulling back. Okay, so I saw this bearish red candle forming, and I actually took this trade, and this was actually a very risky trade, as yes, the news just got released and the price is reacting to it. However, there was a bearish candle forming, especially after going back into the fair value gap, and I was anticipating when the next candle form I will enter the trade and take a sell. So I will explain my entry criteria. I want to see a draw liquidity. As you can see, the price plummet through the whole market, so there is definitely a draw in liquidity and break of structure. There's a small fair value gap for me here. My criteria will be two continuous either bullish or bearish candle form before taking the trade. So in this case it will be bearish candle, and I actually took this trade live just now, so there will be a bearish candle forming next. So I took the risk and entered this trade. Nearest swing high, and exactly 2 points. Actually this did not happen on my trade on MT5. Actually on MT5, I think it was due to my spread. I actually entered later, and I do not took it did not trigger my take profile here. It barely triggered, and actually the price retraces back, and I did not leave the trade, and I continued holding on and eventually it went back to my take profit. Now at this point I was considering to exit, however I waited a while and actually hit my take profit again. It actually went back and took my take profit. So actually if I've entered just on time or the spread was low or my empty fund, this was actually my fastest winner, taking trade here, taking 1 minute, and on the second minute it was a take profit. This was actually supposed to be my fastest winning trade, and I actually held to it, and it traces back here. I was quite scared that it would take my stop loss. However, I just waited and followed through my plan, and it was actually a winning trade. So I was grateful that I stuck to my plan. This was actually a very risky trade, as for a rate folder event, the price will tend to shoot in any direction. I decided to take this risk as it was showing a very strong bearish momentum down. So it actually formed my criteria here. So I just went ahead with my plan and it paid out. I'm actually very fond of this saying, never catch a falling knife. So at this rate, for this price action, it is almost close to no way I will take a buy here, as with this bearish momentum, taking a buy at any point in time without any criteria or any bullish momentum showing is very risky to take the trade. So I went along with the momentum, which was a bearish momentum, and I'm glad that it worked to my favor. As taking this trade, I was thinking in my mind that I should always follow the trend of market instead of going against the trend of market. So selling here was actually following the trend of the market. So in a way, this is a calculated risk. You can say that it is actually a calculated risk, and I'm taking the higher probability trade by following the trend, which is bearish instead of bullish. Thanks for watching.